Today, the dollar is back above 99. Oil traders are staring at liquid natural gas flows, and Wall Street just discovered that bank earnings can, in fact, ruin the party. So, the question today is relatively simple. Are markets stabilizing or just catching their breath before the next headline hits? Because right now, it doesn't look like volatility has left the room yet, but it does look like it's checking its phone. For those of you who don't know me, good morning. I'm Francois, your market analyst here at ATFX Africa. And today we are going to be unpacking some currencies, commodities, and indices. We are going to start with fundamentals first, technicals afterwards, and add just enough humor to keep things lighter than producer inflation surprise that, well, didn't derail the Fed whatsoever. If you obviously have any questions for me during this session, please feel free to pop it for me into the chat section and I will be happy to assist. I already see there are some questions coming through. So you'll see there's two sections. There's a Q&A and there's a chat section. You can use either. I don't care. Um, Good morning. I see I got a little good morning message there. Thank you so much. I do appreciate that. So let's start with the bigger picture today. Okay. The US dollar stabilized above 99 after some sharp swings earlier this week. Okay. Markets digested fresh economic data and continue to debate the Fed's next move. Now, on the data front, US producer inflation accelerated slightly in November, following early reports showing more subdued consumer price growth. Retail sales rose more than expected, suggesting demand hasn't fallen off a cliff. Politically, the tone softened, however. The US president confirmed he has no plans to fire the Fed chair, despite earlier threats tied to a Department of Justice indictment. That helped cool nerves after Fed independence or around Fed independence. And, well, let's put it this way, at least for now. Okay, I think it's cooled some nerves, at least for now. So, markets are still broadly pricing in rates on hold later this month. Okay, 95% no rate cut at this point in stage. So, I think right now we're good. However, they are pricing in two cuts starting in June. And geopolitically, the US president signaled a possible delay in actions on Iran while signing new trade measures related to critical minerals and AI chips. So, the market theme today is stability, but I don't think it's conviction nor panic. Okay, just a market trying to find its footing. Our first currency for today, or the currency that I want to look at today, is our homebound one, which is doing absolutely fantastic right now, which is the USD ZAR. So, USD ZAR is continuing at the moment to drift lower. We're going to look at the charts just now, so you're going to be able to see what I see as well. And the pair is currently trading around 16 Rand 40 to the dollar. As South Africa, or the South African Rand, is extending its broader strengthening trend. Now, over the past month, the Rand has strengthened nearly 2%. And over the past year, it's up more than 12%. Now, this isn't just random. South Africa has benefited from record high metal prices, supporting export revenues and more credible monetary framework following the South African Reserve Bank shift to a 3% inflation target that has improved investor confidence. Reform momentum has, momentum went from the coalition government has also helped sentiment a bit. Now, at the same time, however, slower domestic growth and easing inflation could allow for an additional South African Reserve Bank rate cut, maybe in the first half of 2026. For those of us living here, it will be good for your car payments and your bonds and all that kind of stuff if we can get some rate cuts. However, for the currency, might not be such good news. Now, should this have happened, that may cap the rand strength at times. But the broader balance still favors gradual rand strength, not a sustained US dollar rebound. Now, there are risks on the radar. Ongoing military exercises involving Iran and Russia and China could draw some renewed political pressure, especially from the US. Now, the US president has already announced a 30% tariff on South African goods. However, even though this happened, exports to the US still rose last year. Further escalations remain at risk as well, even if markets appear to be digesting it calmly. For now. Again, if there's any questions, please feel free to ask. I am happy to assist. So, moving over and looking at the charts for today, USDZR has fallen from, I think, last year at its highest, and it was around April. It was trading at 19 Rand, 1993. So 19 Rand 93 cents to the dollar. And I mean, now it's down. You can see there, 16 Rand 40. Now, this pair is still trading within that larger downtrend channel. So that's the one that's running here. And then we have that smaller downtrend channel, which has been going since last year, November, which is a bit more of a tighter range. So if I do put this for you on a larger time frame, you can see that larger channel range. And then for the last 2, 3 months, we've had a bit more of a narrow channel range. But again, the rand is getting to a point now where it is slightly boxed in. So it is currently trading near the lower part of that channel. But there are also some other factors that we need to look at. And I primarily want to start today on a very high time frame, which is the weekly time frame. And the primary reason here is both the 21 EMA and the 50 EMA have now crossed over the 200 EMA, which is that ultimate death cross. Now, the final nail in the coffin would be once that 100 EMA crosses the 200 EMA again. That would be a bit more of a larger downtrend starting to form at that specific point. But then we have some other factors as well, and most of our momentum indicators. So now let's go again. We're going to run down on time frames. Weekly, oversold. Daily, oversold. 4 hourly, oversold, busy bouncing. Hourly, okay, here it's starting to, it just came from that oversold bounce. This was that bounce we saw here, which was yesterday morning. So, but basically everything from a 4 hour time frame upwards is currently showing some oversold momentum at this point in stage. So, in essence, here the broader structure continues to reflect rand dominance. Okay, I don't think we can dispute that fact. Unless the pair decisively reclaims some higher resistance. Now, if we do get a small little break out of this narrower channel, obviously that first resistance would sit here at 1675, followed by about 1695. And then things will start going downhill for the rand really quickly, obviously, if we actually break out of this larger downward channel that we've been in for about almost a year now. Okay. But I do think a question to consider today is, is this a controlled unwind or the start of a deeper structural shift in USD ZAR dynamics? Should we, however, look at some smaller time frames? So I'm dropping here down to a 30-minute time frame, and just some things to consider here at the moment. And again, let's use some of the analysis components that I taught all of you last night when we focused on the Wyckoff strategy. So again, here we can see there is some accumulation. And then we can see there was some false breakouts, which we can see in that area there. So in essence, for me, if you want to, I do know there are some, let's call them in the zone traders. For the majority of this week, there's been some really nice setups in essence, trading from the bottom of the range back to the top of the range, bottom of the range, top of the range, just bouncing in between that. Now, for me, a slightly better setup would either be a larger break higher, and obviously a break higher for that mark up phase would require a break not just of this accumulation phase, but also a break of the actual channel. Now, a break lower would obviously be here at around 1634, which would also break this larger support zone. And from that perspective onwards, then we can start aiming for these lower parts of the channel here at the bottom. So in essence, just waiting on price action to kind of confirm which direction it wants to take. And then based on that directional bias, we can get relatively easy, I believe, 2-to-1 risk to reward ratio setups on this. So that is what the downside would more or less look like. And then again, if we can get a nice break higher and actually a break above, yeah, let's call it a safe entry would probably be here around 1648. Again, as I said last night, putting your stops around that middle of that range, and then that would drive us back up to around that 1664, 65 level to get your 2-to-1 risk reward ratio on that one. Again, this is on the 30-minute time frame. On the 15-minute time frame, there, if you want to trade this low, I think with regards to this consolidation range, if you can get a nice little bounce here at the bottom, you can probably trade it a little bit higher again if there's no confirmed break. Or even here where we are now, we take that off and take that off. So this is obviously a relatively very low time frame, but here we can see we've got that general structure there as well. Yes, there was this initial break here plus that false breakout there. So if we can break and close around this 638 level even here, based on the trend or trajectory and so forth that we are seeing, that could also be a nice little potential setup, which would be an interim trade for that larger setup that we just spoke about. Yeah. So again, just providing options, just providing some structure that I'm seeing within the market at the moment. And obviously on our end, it's now just waiting to see what price action does, and then we can take it from there onwards. On the upside, especially on the smaller time frame, I don't see any potential here because once the actual trade is ready, you might as well just wait for that larger setup to form before jumping into the market prematurely. Perfect. Traders, any questions on your end? Anything that you are unsure of? Anything that you would like to ask based on the analysis that I just shared? please share that with me. Please pop it into the Q&A section or pop it into the chat section and let's discuss it. Okay. So let's see if I can provide better clarity or anything on that end to assist you in better understanding as well. Okay. Uh, I see I have a comment here. I want to say it is a controlled downtrend. Okay. So again, having more of that bearish bias at the moment. Can't disagree with that right now. Awesome. Fully agree with your USDR analysis. I appreciate that very, very much. Thank you. Okay. So if there's no questions on this specific currency pair, let's move over to commodities. And probably one of my favorite commodities to normally talk about and um, provide a lot of detail on, which is natural gas. So this commodity kind of stole the spotlight overnight and not for any good reason. Let me put it that way, okay? Or not for the reasons you want to steal the spotlight. Let's say it that way rather. So US natural gas futures slid nearly 10%. Traders, that hurt. Okay. Dropping to around $3.30 per million British thermal units, close to their lowest level since mid-October. Now, if you've been on this journey with me for some time, you would know that around mid-October, that was kind of when we were starting to layer some long positions and that massive bullish momentum started kicking in. And now we are back down to that specific level already, which is crazy. Now, the main drivers for this is obviously there has been reduced gas flows to liquid natural gas export facilities. Liquid natural gas feed gas fell towards a 2-month low to 17.4 billion cubic feet per day. This was due largely to declines in um, the Corpus Christi facility and Freeport liquid natural gas. Now, while deliveries to Freeport are expected to start recovering slightly, they remain well below recent averages, keeping near-term demand under a lot of pressure. Now, on the supply side, domestic production has eased slightly in January, averaging around 109.3 billion cubic feet per day, down from December's record production. But still, from an historical point of view, we are still relatively elevated. Now, when we are discussing liquid natural gas, the wild card at the moment is weather forecast remains supportive, with some colder than normal temperatures expected across much of the US through late January, which could lift heating demand later this month. So, this downtrend in essence might be short lived, which could be providing some nice setups for us going into the latter part of this actual month. Now, at this point in stage, natural gas would then be caught between that weak export demand for now versus potential weather driving demand later. And we'll have to see how the markets react to either one. But yes, it could be setting us up for some nice positions going into this last part of the Northern Hemisphere winter season. So I do see I have a question. I'll answer that just now. Just moving over to the charts for now, just looking here first. So price action looks very similar at the moment to the fundamentals. It's caught between two areas at the moment. Now, gas is stabilizing near that $3.30 support level, more or less, after we saw this massive sharp sell-off, and even it literally kicked off on Monday, opening with that gap down and just continued trending down from there onwards. Now, Some recent candles show some longer wicks. We can see that here at the bottom, showing some nice little rejections and so on, suggesting that some buyers are defending these lower support levels. However, price is remaining capped beneath this descending trend line that we have here from the top. I'll actually draw that in for you now. Which is obviously keeping bearish structure intact at the moment. And then we also have on the other end, however, we have the stochastic, which is showing, which is hovering here near around 20, yeah, literally lower now, actually. It's around 12 almost, which is signaling some overbought momentum at this point in stage. So near-term support is sitting relatively solid here around $3.20 to $3.10 range. But if this continues to push higher, if we can get a break above that $3.61, that could be that initial ignite that natural gas might require to start gaining some bullish momentum again. The next obstacle to overcome would be that $4 mark. That would also break out of this larger downward channel, which we've been in since early December. And that could reignite some larger bullish momentum and see if we can push back and go retest some of those high points that we saw late last year. So let me quickly just see if there's any questions before I go to a lower time frame. Could that mean a re-entry or adding positions could be on the table? Are we referring here to natural gas in the question? Just I'm not going to mark it as answered. Just let me know if we are specifically referring to natural gas. If we are referring to natural gas, then yes. Okay. Um, for me specifically, if we do see some additional demand coming in due to some colder weather forecast, this could assist us in layering in some buys, pushing it back up. If you do have some entries that are higher in on this, yes, okay, cool. So this is for natural gas. So if you do have other entries that are currently sitting a little bit higher and you get some lower entries here, again, proper positioning management would also maybe be required on this end, where you can start looking at counterbalancing some of your trades. So if you do have some lower trades and they get to a nice point, you can actually maybe start closing some of the higher trades, taking some profits on the lower trades, and then just balancing your trades in that respect as well. I normally know from my end, I love doing things like that, especially if I didn't get the entry exactly right. It is a little bit easier to layer some of your entries slightly lower and then manage everything accordingly from there on forward. So if we do go to some lower time frames, we can see obviously we had that initial change of character here at the bottom, but it just took off like a rocket. There wasn't really any nice entry points from that perspective. It gave the change of character, went. So now we would want to see a little bit of a pullback, and we'll probably only get a nice bullish entry once we break above this resistance area here at $3.60. Up until that point, unless you get some nice sniper entries lower and you want to start layering your trades, I wouldn't day trade or scalp trade any buys, okay? Because there's a potential that this would push back to this trend line here around $3.50. That's also a relative psychological level as well. And that could see some rejection. And then on an intraday perspective, we could see it come back to retest these low points. So from that perspective, we might actually look rather to see if we can get some short-term shorts and then trade from there onwards. With regards to the longer-term setups, by all means, obviously wait for those nice big breaks and we can look for anything higher. But if you even capitalize on some of these shorter-term short opportunities, there could be a potential to then get some nice sniper buy entries here around $3.10, $3.15. And again, as we stated, potentially layering some trades going into the remainder of the month. Perfect. Let's finish things off for today, as usual, with equities. Now, the equity markets pulled back for a second straight session yesterday, and it pulled back hard yesterday. The S&P was down more than 0.5% as technology and financial stocks weighed on the index. And we specifically saw chip makers and software stocks see massive sell-off following reports that Chinese authorities are restricting certain US-made chips and cybersecurity software. Now, major tech names like Microsoft, Amazon, Meta, all closed lower. Financial stocks, which extended losses, we saw Wells Fargo drop around 4.5% on weaker revenue. Bank of America and Citigroup fell despite beating profit estimates amid concerns over US president proposed credit card interest rate caps. So all of this is adding to some bad news for companies and specifically indices such as the S&P 500 right now. Now, the US president also commented around AI chip tariffs and data center costs, adding another layer of uncertainty for tech-heavy indices such as Nasdaq and the S&P. However, despite all of this, the broader trend still remains relatively intact right now, okay? The S&P 500 remains up nearly 17% year on year and is still trading near record highs, which is in essence reminding us this is correction conversations that we should have and not a collapse narrative. So when we actually do look at a chart at the moment, just give me a second, there are some nice opportunities starting to show themselves here for today. So as we said, that broader trend remains intact. And you can see here where we bounced on that trend line um, late last night to early this morning and started pushing up from there onwards. Now, markets are appearing, just when looking at price action, to be digesting a lot of earning risk, policy uncertainty, and geopolitical noise all at once. Now, earlier today, I felt that the index was a little bit boxed in between that 6,950 resistance and that 6,900 support. However, as we can see here at the moment, it seems to be breaking through. So what I would like to see here is just a little bit of a dip on the 15 minute and then a little bit of a push higher. And specifically, if we can get a push above the 6,095, that could actually confirm a nice little upside breakout with some potential then to go and retest that all-time high and obviously just placing some stops just below that uh, current resistance level, which at that point would then be newfound support. So that is definitely an option. On the short side, I would wait a little bit, especially I would kind of want to see us break below this larger trend, which is sitting here around 9,000, 6,910. My apologies. So just to break below that actual trend line and then see where the market is going. And because of the fact that this is just too tight of a range for me to even enter some scalp trades. So from here, If this keeps pushing, and it breaks nice and cleanly above, I might actually just trade with the momentum on that today and see how we can push higher from there on forward. So we might actually, before the end of the week, see this go and retest that all-time high, sitting there around 6,997, 98 area. Or we could see some larger pullbacks. Again, just waiting for price action to show what direction we're going to take, not just randomly jumping into the market. Traders, any questions on your end? Not seeing any right now. If there are no questions, what I would say to watch out for going into the session, and especially going into tomorrow morning's earlier session before tomorrow's market brief comes out, I would say first, let's watch the dollar index, see if it stays steady above 99 as Fed expectations start to settle. When we look at the USD ZAR pair, does it continue to grind lower, or do the geopolitical headlines re-enter the chat and start driving prices up again? With regards to commodities, will natural gas find support if weather demand starts kicking in? And again, only price action will show us that. But again, if we capitalize on it correctly, it could be a very nice start of the trading year for all of us. And then finally, does earnings season calm equity markets or just make them more nervous? These would be some of the things that I would personally be watching out for as well going into today's trading session, especially the latter US market open. And traders, thank you for everyone who attended. Thank you for everyone who interacted. No questions from me. Thank you so much for your analysis. Much appreciated. Absolute pleasure. With that being said, I think that wraps up today's market brief, which was brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Now, if you want to go and experience the difference for yourself, just head over to atfx.com and go and have a look. Until next time, traders, stay sharp, stay focused, and trade smart.